Hello, everybody. So I'm traveling, but I'm making an unplanned video titled Growth Bleeds, Powell Fears. The fears of Jay Powell, the fears of Jackson Hole, the fears of the Friday speech, and what that Friday speech is going to do to the markets. The markets are selling off early, and you would not see that if you just look at the S&P 500 like most commentators do. Old World was okay today, but New World, which is what I invest in, which is what this channel covers, New World was not okay today. Minus 1.5% for the NASDAQ. In the grand scheme of things, it's not that much, right? But the type of stocks I cover on the channel, I tend to compare them to I think the closest ETF I can find as a proxy for a type of stocks I usually cover on the channel is the ARK Invest ETF. But for example, like I find it strange that Cathie Woods doesn't see HIMS and value in HIMS. But anyways, it doesn't matter. As far as volatility goes, the ARK ETF rate is down 4%. So that's a gauge that really early growth, growth that is not yet cash flowing like all the way, that growth is clearly being impacted by the soon to arrive speech from Jay Powell. And so the markets are very fearful of that. And that's why we saw such a sell-off today. And of course, if you look at and this is the point I'm trying to say is when you need to zoom out. When we look too closely, we would tend to forget that volatility is the price to be paid for high returns. Volatility is the price to be paid for high returns. The pain that you probably feel today in your growth portfolio, that pain is the price that you are paying for those high returns. Seeing those positions, right, especially in the Bitcoin-related stuff, seeing them down 60%, 70% from all-time high a few months ago, that causes pain, right? That's prospect theory. The little pain the pain that it causes is really the price you're paying for a return. It's like you have to sacrifice something for these returns. And what do you sacrifice for these returns? Well, it's the bad feeling. It's your emotions. It's like you look your portfolio are like, how many houses did I lose today? How many houses did I make today? Right? It's kind of like especially if as you start to have a bigger portfolio, and you could be like, how many cars did I lose today? Anyways, the point I'm trying to say is I wanted to show you this. Of course, green doesn't make the headlines. As you know, I own the ARK W ETF. I've always thought, and a lot of people who follow ARK Invest think that the ARK W ETF is a better ETF than the ARK K ETF, because ARK W essentially doesn't have healthcare, but it's got Bitcoin instead. And if you look at the ARK W ETF, we're essentially back to the highs of 2021, roughly, give or take $10. And that is despite the enormous drop that we have on these ETFs every 3 months, every 6 months. We have big drops, big drawdowns. But they bounce back up. And so keep that in mind. Like growth stocks outperform no matter how we feel on Powell days and Powell speaking. And unfortunately, it's like every month there is a Powell fear in the market. I want to point out the rate cut probabilities for the September 17 meeting. And of course, the Friday speech will probably settle this one way or another. But you can see, a lot of people say, it's in the bag. The only question is between one rate cut and two rate cuts. And I've been wrong so many times expecting a rate cut, but the only thing I can tell you is I think there will be a rate cut in May 2026, because in May 2026, Mr. Powell will be gone and Mr. Dove will take his place, right? In May 26. That's the only thing I'm certain of. I'm hoping. But if you look at this, 15% of market participants don't expect any rate cut in September. right? And usually the speeches of Powell usually make the markets go down pretty hard, which is why the market is kind of dropping preemptively. And what do we think these odds are going to be on Friday night? Right, 15%. That's not that much in the bag, right? I'd rather see like 4%. So if you think we're getting a rate cut on September 17. I'm not so sure. Either way, as a long-term investor, May 2026 is just around the corner, and so either way, whatever Powell wants to do, I don't really care anymore. May 26 is coming, and May 2026, I will be owning all of these growth stocks as we inevitably get another chair who will trigger a long runway of rate cuts, a long runway of rate cuts. And so today, now let's talk about the bleed. Let's talk about the stocks that have been bleeding. Of course, as you know, on this channel, I covered strategy early, not as early as some other channels, but it's well over 10x for many people on this channel who have followed me on my strategy journey. Anyways, the stock is still doing just fine over the long run. In fact, over the long run, remember, this is after today's drop. So today's strategy was awful drop. The market's freaking out, minus 7.5%. I said this on the Patreon, but I'm sharing this publicly as well. I did buy more strategy equity. Straight equity. Sleep well at night. I'm sleeping well at night buying strategy equity at 336. Why? Because now we have a 25% maintenance margin requirement. So it's treated like a Tesla. It's treated like a NASDAQ. So I'm sleeping well at night. No need for options. No need for any such thing. Just I'm just buying the equity and sitting tight. I think this is a deal, and I bought multiple times my daily amount of DCA at 7%. Of course, dry powder is left for me. If it drops more tomorrow, you bet I'll be buying more. Not like 1%, but if tomorrow it drops again by 7%, I'm buying more. This is crazy. I mean, you're talking about a stock, by the way, who is still about 29 times your money since they adopted a Bitcoin treasury company. This stock did 29 times, 29x in 5 years. Think about that. 29x in 5 years, right? And 29x in 5 years is worth almost no premium. We are now trading at a 33% premium over net asset value. I mean, this is entirely ridiculous. Strategy is trading at a 33% premium over net asset value. Think about that. We don't place a premium on Sailor. We don't place a premium on the astute management that has taken place for the past 5 years for this stock. So I look at this stock and I'm like, the margin of safety is amazing. It's 75% Bitcoin. I'm buying 75% Bitcoin. If Bitcoin pops, I'm good. And this is what I love about these companies. These companies have a floor on the price of Bitcoin, and the best example of that floor, that's why even my Meta Planet, I'm keeping these for a very long term. Very happy. It's just straight equity, keeping it for a very long term. I don't really care that it's down even more than MSTR, because as a long term shareholder, as someone who will still own every single BTC related assets when Bitcoin crosses $1 million, I know that there is a floor. There is a floor. What is that floor? We see it for Mara. Mara didn't fall that much today, did it? Only 5%. And look at MNAV for Mara. It's a 0.978. So it's got a 0.98. So, and Mara, you would think with how much hate Mara has gotten relentlessly for years now, you would think it would be trading much below a 1x MNAV. The market is not letting these stocks get below 1x MNAV, or barely. And so it provides a floor, and you have Mara who's still growing the Bitcoin stack, by the way. They're still growing the Bitcoin bag, and they're trading at a 1x MNAV. Think about this. Your ETF, your IBIT ETF is not growing Bitcoin per share, right? Mara is accumulating more Bitcoin. They're mining it, right? And they've gotten more efficient, and they've done a lot of things, but they get no credit, like a lot of miners get no credit right now. And so I consider it's ridiculous. The market is entirely ridiculous, and I guess it's ridiculous to the upside and it's ridiculous to the downside too, because when this stock pops, you will have a lot of bears come out and say, oh, this is ridiculous, this is Ponzi scheme, blah, blah, blah. You will have that going on as well. And anyways, like, right now it may seem like strategy is losing, but keep in mind, this is August. We have Powell. We have enormous Powell fears, and over a short run, the market makes very little to no sense. Let's move on to two other darlings of the channel, which are down quite a bit, and it's HIMS and LifeMD. And LifeMD, by the way, I still consider to be the better deal. I think HIMS is a steal as well at $42, by the way. HIMS, to me, is a steal. But when I look at how these stocks trade, like if I were to agree to the fact that there is a lawsuit risk on the GLP-1 front for HIMS, which I don't necessarily agree, because compounding is a well-established practice. They are doing compounded GLP-1s for people who legitimately need it. But if I were to just assume the lawsuit risk, I know I've said that before, LifeMD doesn't have that lawsuit risk. So why is LifeMD dropping in line with HIMS, trading just like HIMS? So to me, these stocks should not be trading hand in hand. To me, the volatility of a LifeMD should be lower than the volatility of a HIMS. But we're seeing the same volatility for one stock that still sells branded GLP-1. It's got insurance issues and reimbursement issues, but so anyway, I find LifeMD the better deal, and when I'm going to look at a day where HIMS and LifeMD are dropping the same, and as long as LifeMD doesn't catch up in the stock price and gets back towards $10, I will keep thinking that LifeMD is the better deal. $42 for HIMS is a very honorable price. It's a fine price. I don't mind it. Right, it's a fine price. I mean, HIMS is growing fast, and contrary to popular belief, HIMS does much more than just GLP-1s. Contrary to Wall Street belief, HIMS is a much more holistic story than GLP-1, and they have many verticals where they are successful. Anxiety is one, dermatology, right, hair loss is one. ED, we're going to get back on track. Right, just like LifeMD said they did on the call. So I don't understand. I really don't understand why these stocks are being battered like this. I don't get it, and I get it even less when you consider that if you look at the whole market map, healthcare has done pretty well. Healthcare, it's dropped, sure, but it hasn't dropped nearly as much. It's done pretty well as a whole, healthcare. So these companies must not be seen as healthcare. They must be seen as some, I don't know, marketing machines or anything like that, which to me is complete nonsense. These companies are digital pharmacies, digital clinics, with a modern IT stack on the back end, and modern marketing of the day, right? Modern customer-centric marketing. And I'll conclude this video talking about stocks that to me, it really makes little sense that these stocks would sell on Powell's speech fears, or at least would sell as much. First of all, Nvidia, Nvidia has not reported yet. So what's going on with Nvidia? Like, are we just pre-punishing Nvidia? Like, is Nvidia not the unconditional leader of hardware and of AI? So I agree. These two stocks are more expensive, but if we are going to get into an easy money environment, if we're going to have rate cuts, well, I guess that's why they're dropping. Nvidia dropped a lot, but Palantir is very interesting. Of course, I do believe Palantir is overvalued, but my take on overvaluation is that Palantir, the company itself, is still firing on all cylinders. I actually listened to the call. They're firing on all cylinders. Like, sure, they look too expensive by any metric, but nothing has changed materially for Palantir today. Just the valuation. It's all about the denominator. Like, the stock went down 10% today. Nothing has changed materially for that company. They're still firing on all cylinder. This has been an expensive stock for a while. Will Palantir be an expensive stock all the way to another 10x, right? And of course, people are saying, "Oh, Palantir could never be a $3 trillion company." Well, remember, they used to say Nvidia could not be a $1 trillion company, and now Nvidia is well over $4 trillion. Nvidia is the largest company in the world, and so these companies move so fast. Anyways, I don't cover too much, but I do think it's a bit of an overreaction. How could Powell like trigger such a drop, say in Palantir, when we have no news on the stock? We have nothing on the stock. So anyways, this re-rating, this market action on these growth stocks, I don't really understand them. I think it has to do with August. We still have a lot of low volume, and that coupled with Powell fears, that's enough for the market to drop this much. So I'm not worried at all. I'm not worried at all. I bought more today. I'm happy, but the pain is here. The pain is here for me. The pain is here for everybody. When you see the minus on the account and you see the red, you do feel the pain. But don't forget that a loss is gonna feel twice as bad as the goodness that a gain is gonna feel. That's prospect theory for you. Is losses hurt exponentially more, much more than gains. I made $1,000 today. Like, whatever. You lose $1,000 though, or you're like, oh, that really hurts. That really, really hurts. And that's how human psychology works, and it creates these vicious cycles where people want to cut the loss. They want to cut the loss, and they sell, and it triggers more and more sell-off. A lot of psychology going on in the markets. Anyways, this was not investment advice. This is not financial advice. This is only entertainment. I'm hoping you were entertained. Please like, please subscribe, follow me on Patreon, follow me on X. Thank you for watching, and have a wonderful, wonderful day.